let's talk about the other set of numbers that India tracked closely today. The markets. Indian stock market indices crashed today. It was bloodbath with the Sensex and the Nifty falling by up to 8% at one point. 8% fall. There was a slight recovery as the afternoon wore on, but the markets were still down by almost 6% at the closing bell. Let's show you the numbers. The Sensex closed at a little over 72,000, down by more than 4,000 points, which is 5.74%. The Nifty fared slightly worse, closing below 22,000 points, so down by over 1,300 points or just shy of 6%. Now, for those who don't follow the markets, these numbers may not mean very much. So let me break it down for you. Indian investors lost trillions of rupees today. At one point, about 39 trillion rupees. There are 12 zeros in a trillion. 39 trillion rupees is about 467 billion US dollars. That's how much the markets lost at one point today. So in one day, the markets turned on their heads. On Monday, they touched a record high, a market cap of 424 trillion rupees, which is a very, very big number. It's a record high. But today, that number is below the 400 trillion rupee mark again. Let's look at where the major losses took place. Using the Nifty indices, the Nifty 50 tracks the shares of 50 Indian companies. 42 out of these 50 companies saw their share prices tank. These were the 5 worst performers today. People were rushing to get rid of these shares, and this is a direct reaction to the election results. Investors believe that these companies won't do as well without a strong BJP government in charge. When you consider the scale of today's bloodbath, it shows that the pessimism ran across industries. There are multiple Nifty indices that focus on specific industries. Let's look at how they fared today. Bank stocks are down. Automobile stocks were down. Pharma stocks, IT stocks, media stocks, almost every industry index closed in the red. There was just one outlier, that is the FMCG sector. Companies like Dabur India, Hindustan Unilever Limited and Britannia, all of them made gains. It seems that investors decided that if nothing else, people are not going to stop eating biscuits. Every other sector, however, was burnt by the electoral fallout. There can be a lot of reasons for this, but sentiment is a big one. Even though India's Prime Minister is on course to continue for a third term, even though we may have the same government and the same economic policies, the people of India are still upset, the investors. They feel that this election result will change the way the Indian economy works. And that is why they decided to dump their stocks. Do you know the last time something this disastrous happened in the Indian stock markets? It was in 2020. When the Wuhan virus locked India down. Investors are effectively comparing these election results to the pandemic. Of course, most companies themselves won't be hit. Their supply chains are still functional. Their operations are still running. So tomorrow should be business as usual for most employees at most companies, the private ones anyway. We can't say the same about public sector firms because state-owned companies are dependent on the powers that be. They rely on the government to run them. So these elections will matter for state-run enterprises, and that was also reflected in the market wipeout. ONGC, the Oil and Natural Gas Corporation, lost almost 17% of its share value. The state power company NTPC was about 15.5% down. Shares of the State Bank of India were down by more than 14%, and public sector banks in general were hammered. The Nifty PSU Bank Index was down by over 15%. So public sector companies accelerated the market free fall and left multiple shareholders holding the bag. The election results have left most investors poorer than they have been in months. And it could take a while for them to start betting on the markets again. But India's economic fundamentals have not changed between yesterday and today. So the Indian markets will recover from this shock. Eventually, the emotional reaction will end, investors will come to terms with the political reality, and the markets will go back to reflecting India's economic growth.
Firstpost reports from the world's second largest continent. Hello, I'm Alison Lagrange. A very warm welcome from Durban, South Africa. We get you the news and the newsmakers from Africa. From elections to climate change, to innovations and opportunities. As the world's attention shifts, we report from Africa, the heart of the global south. Join me every weekday live on Firstpost.